Welcome back to another episode of Investies. I'm recording this episode a bit early this week. I have another jam-packed week. I'm doing some exciting things. I am participating as a judge for the NFTE, which is short for Network for Teaching Entrepreneurship. They are actually headquartered on Wall Street, but they are having an event here in Dallas, Texas, coming up on Wednesday. They will be hosting a summit called South Youth Entrepreneurship Summit. I will be a judge where students will be fast pitching me their entrepreneurship ideas. And then I will also be delivering a presentation on the stock market, explaining the basics of the stock market. At the beginning of this year, one of my biggest intentions was to begin the process of speaking to youth. This has always been one of the bigger visions of In Luz We Trust, which is to educate high school students and students in college on the stock market. It's something that I really truly feel called to do, and I'm excited to be getting these experiences. And hopefully one day I get to see Wealth Warrior, the course, as a established curriculum in schools. So I'm very excited to be participating in NFTE Summit this week. So we are recording early. I also just want to take a special moment to give a big shout out to all the ladies that attended Brujas of Wall Street on Saturday night. We had an incredible evening at the mansion on Turtle Creek, which is a very high-end, I would call it a boutique hotel. And when I say high-end, I mean like presidents of the United States come and stay here when they visit Dallas, Texas. It is very exclusive. You can most certainly feel the generational wealth as you're walking in. You rarely, if ever, see any people of color enjoying the hotel as a guest, as well as the restaurant on location. It's a kind of place that's like, if you know, you know. So it was really important for me to rent the library in the restaurant, which is a coveted room within the restaurant that was once an actual library, and just show up so that we can be our authentic selves and take up space in places where we have, for the most part, been excluded out of. And it was amazing. We had a 3-course meal. We had a pinning ceremony. We had members in there that had been part of the group for years, and we had newer members. We also had an incredible jacket ceremony. Okay, we're rocking some dope varsity jackets with the In Luz We Trust logo, our names, nicknames. These jackets are going to be exclusive to events only, like this one. And so if you want a jacket, you have to make sure that you join our next event. It was a complete vibe. It was absolutely a dream come true for me. This is something that I have been wanting to execute for years and years and years. I know from being an investor that these types of dinners are what is normal for the elite, wealthy white men that are investing. And so just to bring this experience to our community was something that was really special for every single one of us, something that I am working to normalize. A very special thank you to all of the Brujas of Wall Street. I look forward to doing this again next year. We're going to take a short break, and when we get back, we're going to talk about stock market updates that have taken place in the last 2 days that are pretty significant pertaining to stock market growth as well as inflation data. It is really important for me to provide as many resources as possible and just open up the space for us to have intellectual conversations about economics and the stock market. And I want to tell you that everything I create is centered around having a safe space. And what I mean when I say that is that being a child of immigrants myself, being someone that was formerly a gang member, a teen mom that was looked at as a statistic, it is important for me to convey that at the forefront of everything I do has the intention of growth and stimulating each other's minds. With that being said, it is important for us to understand where we are in the process of investing and of growing and changing our perspective towards money. And so not only do I want to model these conversations, but I also want them to be safe enough for those that are just entering our community to ask real questions like, what does this mean? I don't understand this. Can you please rephrase this for me? And nobody, not one person in our community is going to look at you sideways or judge what you're asking. That to me is a safe space. We want to be able to model intellectual conversations so that you can move in your workplaces, you can move in your communities and begin having those for yourself. This experience is something that is accessible for you over on patreon.com/In Luz We Trust. Join our community over there of investors. We have 4 separate tiers. The first tier is the morning bread tier, where you receive all of the news on the stock market and the economy when the stock market is open on a Monday through Friday basis. And the following tiers are on a sliding scale where there are a list of benefits that you can go check out over at patreon.com/In Luz We Trust. Now let's get into the stock market. It is Tuesday the 14th, and let me tell you, the stock market is on fire. Last week on the podcast, I talked to you about seasonal market trends. I also talked to you about the increase by percentage point on the S&P 500 and the NASDAQ. I mentioned that a 10% increase is known as a positive increase for the year. Okay, so I just want to let you know that today, as of the recording of this episode, in one day, we are up 1.4%. I'm recording at 11 a.m. on Tuesday, and I cannot believe the incredible increase we've had. We had the most important data piece come in today. It is known as the Consumer Price Index, also known as CPI. CPI came in at the lowest we have seen it in 2 years. CPI measures the changes in prices paid for goods and services over a period of time. This index is a reliable measure of inflation. It tracks the cost of basic goods such as eggs, cheese, and steak on a monthly basis, allowing for annual comparison of price fluctuations. The standard inflation rate is 2%, which is the goal that we are currently striving for. We know that inflation has been high in the last 2 to almost 3 years. We've seen inflation as high as 8%. The goal here is to lower inflation. This is something that the Federal Reserve takes extremely seriously because this affects the majority of the country. A recent data report by the Lending Club showed that as of September of 2023, 62% of adults are living paycheck to paycheck. Ultimately, the Federal Reserve wants to see a healthy market, and 62% of Americans being affected in this way by inflation is not healthy. As I just mentioned, the Consumer Price Index is one of the leading indicators that lets us know how inflation is doing. Is this something that the feds are tackling effectively? CPI data this morning said why yes, it is something the feds are attacking effectively. Increase in CPI there is no increase. It's flat. It is sitting at 0.0% for the month, okay? Meaning that we had no increase month over month, which is positive news for inflation. Economists were expecting an increase of 3.3% year over year, so we are slightly down for the year over year expectation. Overall, no increase month to month really shows us that we are moving towards a positive direction, and not having seen a flat number like this in the last 2 years makes this extra celebratory. So the stock market is going bananas this morning. It feels good about the potential of our Federal Reserve no longer increasing interest rates, at least not for the short period of time. It's going to go ahead and celebrate this news. Of course, anything can change. We can receive CPI data for next month and the numbers can be completely different. Ultimately, as I mentioned, we are looking for a 2% increase year over year. Given that at the height, we were in and around 8%, I think that the feds are doing a great job bringing inflation down. The strongest tool that the Fed has in their toolbox in order to lower inflation is by increasing interest rates. Increasing interest rates makes it much more expensive for you and I to borrow money, but it not only impacts us, it also impacts companies, business entities. When it is more expensive to borrow money, we typically see less growth in the economy, less growth in innovation, because most of the time companies that are innovative receive loans in order to propel their growth, in order to pay and fuel the employees to develop the innovation. And so you can see if the stock market is made up of publicly traded companies and money becomes too expensive to borrow, then ultimately raising interest rates severely impacts the stock market. The stock market today is celebrating that the feds may potentially hold off on increasing interest rates. We are at a flat CPI month over month. As a reminder, CPI stands for Consumer Price Index, and this is an index that measures goods and services and their price increases over a period of time. For everyone participating in the market, I hope that you take the time to celebrate these wins. Don't get ahead of yourself emotionally. Don't get too excited. Take it with a grain of salt, but make sure you celebrate it. For me, celebrating it means opening up my brokerage account, taking a look at how far I've come as an investor in the process, being really proud about regulating my emotions, and being really proud of my participation. I'm your host, Linda Garcia. Investies podcast is a Cosmic Standard and In Luz We Trust production. A very special thank you to the team, Eliza Smith, Jacob Winnick, Asia Simpson, and Nina Gensler-Debs.